Welcome to the Microfinance Podcast. Listen to inspiring interviews and take a look at tools and products that are used in the field. This podcast is produced by MicroSave, market-led solutions for financial services, and is brought to you by Moving Planet Films.
From an MFI point of view, the biggest issue that you have is in trying to roll out or take advantage of branchless banking channels is that it's fairly complicated to roll out. It's a fairly complicated business. You have to span over a range of domains. There's technology choices you'll need to make. There's business choices you'll need to make. There's marketing. There's products that you'll need to create. There's a lot of activity. But probably the hardest part is that in building a branchless banking channel, people that are not used to talking to each other have to start talking to each other. The MFI, the telco, the pharmacy franchise. It's a new set of relationships that don't exist today. And that takes time to build those sorts of relationships because the first step that needs to happen is understanding each other's perspectives. We need an aggregator who stands in the middle of this and creates an interoperable open platform so that many MFIs and many banks can participate. Again, I go back to the previous point I was making. It's all about volume. The more we fragment it into my solution versus yours, the less we are able to deal with the business model. So from a business model point of view and just from a practicality point of view for MFIs, I would hesitate to advise MFIs today to go it alone. Just get on with doing it because it's such a beautiful idea. What we need is models for aggregating the interests of the MFIs and doing something together. There's some examples of that happening today. For example, in the Philippines, the rural banks are acting together in interfacing with the mobile operators and with the outlets that are serving as cash-in, cash-out points. So that's a very exciting model that we need to see more of. I would say the most common mistake that people make when they're trying to set up a branchless banking channel is not to start with the business model. This is true in most circumstances in business, but the hardest part is figuring out the business model. The technology works. There's many vendors. Yes, there's some solutions that are better than others, but none are limiting. The limiting factor here is the business model. And in particular, I go back to the business model of the agents. The potential of branchless banking, keep in mind, is not me being able to sign up 3 stores, 5 stores, 10 stores. That is the old branch-based model where I set up a small set of transaction points. What we're talking is about not tens, but hundreds of points. So the business model not only needs to be good enough, it needs to go more than that. It needs to be something that everybody wants to participate. It needs to be a why wouldn't you do it sort of answer to that, which is why the business model is very essential. If you don't take it to that level, it will feel too hard to be signing up the agents. So the most common mistake, I go back to not really looking at it from the agent's point of view. The regulator plays a crucial role in making all of this happen in many ways. First, the whole notion that financial transactions have to happen at outlets controlled by the licensed institution is a regulatory notion. Back in the days where we didn't have the technology, that was the easiest and the best way to ensure trust at the customer interface. If there was no party between customer and bank, that was presumed to be trusted. If you put someone in between, that was not trusted. Now we can change that because we have the technology. So the first thing that needs to happen is bank supervisors and regulators need to get comfortable with what are the separation or outsourcing models that deliver trust. So adjusting all the regulations on the customer interfaces that reflect this new reality that needs to happen, because without that, it's a showstopper. Beyond enabling this to happen, there's a second very important point, which is branchless banking is about being able to, giving the convenience of people to transact from their villages, from their homes. But if getting onto that means opening an account in a very cumbersome way where I need to travel to the capital, that's like an original sin that pollutes the whole model. It needs to be as easy to get into the service as it is to operate within the branchless banking model. And that, of course, is a big challenge, because that means that know your customer procedures need to be adapted to fully exploit and take advantage of branchless banking. Of course, this needs to be done in a way that respects the objectives of know your customer. So the essence here of the solution is going to be understanding the risks that this places from an anti-money laundering point of view, and balance that against the convenience we're trying to bring to people. One can think, for example, of putting caps, transaction limits, on those accounts below which it's okay for the agent to be doing the face-to-face interview. Or even it's okay for the customer to self-report who they are. Put that under a limit, and if the customer wants to do higher transactions at that point, you tell them, well, for that you need to come to the capital when it's convenient to you, to our branch, and we'll allow you to do something bigger. So that's about not putting the barriers to adoption by the customer up front, but rather give them something that draws them into the service. So the whole KYC, know your customer regulations are going to be key for this to flourish. And I would say the third area is around the whole area of interoperability. It stands to reason that if the problem is volume, getting all that volume, we need something that works in an integrated fashion. On the other hand, regulators need to be very careful as to how they drive to that outcome. That's a desired outcome, but that's not necessarily a regulatory starting point. Because if you mandate interoperability in particular ways, you're risking people not having enough incentive to be the ones building it. Everybody will be very excited. Everybody will want to be a part of it, but I'm going to wait until the guy next door does it, and then I'll jump in. But of course, then that never happens. So managing the whole interoperability aspects is very important. There's a clear regulatory objective, but just be careful with the tools that you use to get there.